Good morning, good afternoon, and good evening. My name is Sophia Aaron, and I'm the Global Blockchain Business Council's Communications and Content Lead. It's my pleasure to welcome you to the Global Blockchain Business Council and Global Digital Finance's Global Leaders Series. This is a weekly global town hall we host with policymakers and business leaders around the world to hear their insights into their work, the state of blockchain and digital assets, and current global affairs. Today, we are joined by Tim Grant, who is CEO of Six Digital Exchange and a GBBC board director, and GBBC CEO Sandra Rowe, who is also a GDF board director, for a conversation and live audience Q&A on how Six Digital Exchange is building the first regulated digital market infrastructure where professionals can access, transfer, and store value. Before we begin, we would briefly like to introduce Tim. So Tim joined SDX in March 2020 as head of business. He brings more than 20 years of deep tech and management expertise across institutional capital markets and enterprise blockchain business to the company. Prior to Six Digital Exchange, Tim worked for UBS O'Connor, UBS Investment Bank, R3 Lab, Research Center, and DrumG Technologies. In his previous role as CEO of DrumG, he was responsible for the delivery and operations of enterprise-grade distributed ledger solutions for financial services. We are so pleased to have him here with us today, and we welcome your questions at any point during the conversation. So please submit them in the Q&A box at the bottom of your Zoom screen, and our moderator, Sandra Rowe, will take them. Thank you, Tim, and thank you, Sandra. I'll now hand things over to you to begin.
Great, thank you so much, Sophia. And I want to give hats off to our GDF partner as well, and SDX is a member of GDF as well, for this Global Leader Series. And it's always a pleasure to catch up with Tim. He's been a tour de force in 2020, even though it's been a very difficult year for all of us. Tim and SDX are, on the map on various topics, especially with respect to next generation digital infrastructure. But today, we're going to spend a little bit of time of getting to know Tim, the person. And because it's a Global Leader Series, we do actually want to not only get to know what Tim is doing as a leader, but also how did he get to where he is? And for the young entrepreneurs and young generation out there who are looking at leaders like Tim, to get to know the person and how he got to where he is today. And so Tim, can you kick us off and just talk a little bit about your path to now running SDX? How did you get here? We talked about UBS, we talked about R3, we get that, but what really motivates you to do what you do?
Yeah, well, thank you, Sandra. Great to be here as ever. It's funny when you hear our introductions, you're like, we're kind of, it's become a relatively coherent, cohesive community, of all these different organizations, all of which we're all members of these multiple organizations, which I think is a mark of maturity, right? We're finally getting to a point where, this is all joining up the dots. And it's nice to see it. And we often joke, Sandra, about how we first came together, which was at the original Singapore FinTech Festival, which now is, I guess this will be its 4th or 5th edition this year. And we all the way back then, you saw a lot of the players who were around then are now kind of leading the charge at a global and an industry level, which is great to see. So it's quite, I must admit, I've only really realized it this year, but you start to realize that you're one of the OGs at some point, like you're one of the original crews that really made the leap. But that, it comes to your question, why make the leap? Why do this at all? And if you look a little bit at my history, I was fortunate enough when I joined UBS to be put in a team that was trying to disrupt very early. We were doing a web-based platform in 1999, which for institutions was a very odd thing. People, institutional financial services wasn't doing business over the internet in 99. So I kind of had a baptism of fire, and sort of always had that disruptive streak about, let's look at the trading floor at UBS and think how we can make it better for UBS. And I never really lost that. And a wonderful woman who became a friend and mentor, Julie Chakraverty, my first boss, really instilled in me that kind of go make it better attitude. And I've never really lost it. And when you look at my history, been in the investment banking side on the trading floor. UBS's trading floor in Stamford, Connecticut in the early part of the 2000s was the biggest trading floor in the world. And we were a major fixed income player at that point. And we had the perspective of the almost the tail end of the heydays, depending on what way you look at it. And then came the financial crisis, and that financial crisis came at a time in my career when I really asked myself a lot of questions. I was experienced enough. I was already a managing director at UBS, and it really did sort of force us to ask some hard questions about, how did we end up in this mess, and what are we doing as an industry? You sort of assume everything's happening for the right reasons, and then you realize, no, we can all get sucked into going down the wrong way as an industry. Some might call it that Abilene paradox, where you end up at the wrong place and nobody knows why you ended up there. So that was a very formative time, and in many respects, I left the industry for a little while in 2009-10 because I was kind of a bit disgusted with what I'd seen. I thought what is this construct that we've built that tends to be focused a little too much on short-term gain and not long-term prosperity. So I came back and into the industry. I miss it. I love it. I do love financial services, but I kind of went into my first startup in 2011. So that's, if you haven't worked in a startup, there's this, I say this at SDX all the time, like there's a sort of idealized romantic view of what it means to be in a startup.
Right.
Where everyone's sitting around in fluffy multicolored cushions playing pinball and foosball, and ideas are just coming out of the ether, and we're creating the future. And actually the truth is kind of the opposite. It's a graft. It's a hard graft, and it forces you, which you don't have in a big financial institution, to question every single decision you make. And I learned the hard way. We learned the hard way in that startup, and we got bought by Bloomberg, but it wasn't in particularly great circumstances. So I would chalk it up as a fail and a lesson. But that was me bitten by the entrepreneurial bug at that point, and I'm like, oh, I can start to see what it would mean to build something, but with eyes to the whole industry. We were trying to price the credit markets in real time. Now that got booked by Bloomberg. I ended up spending time there, which was a valuable lesson in itself. And then I went back this time to the buy side, to UBS, because O'Connor, UBS's hedge fund unit, has a rich and storied history. It's really one of the greats over the last 30, 40 years, since the mid 70s, when they were pricing options and really doing it faster, better, cheaper than everybody else. And that's where I had my blockchain moment. It all comes back to one day. It was in March 2015. And to be clear, I had no Bitcoin knowledge, expertise, didn't have a clue what blockchain was. And worthy of note that I was also at that point in charge of technology. I'd ended up being given the mantle for technology. So I was running the technology platform for a $6.5 billion global multi-strat hedge fund, but it was on UBS's sort of substrate, and therefore I actually knew, I could see and was feeling the pain of this honking great thing that had been built over the last 40 years, and everybody jokes about it, but it's fast going to become a big issue, and already is. That some of the lines of code in there go back to the 70s, the COBOL stuff. And it's just mind blowing when you see it. You're like, well, there's no way that this makes sense. But there's no answer. There's no way out. It's sort of everyone's stuck. And there I was in the West Coast, and I met with Coinbase and Ripple on the same day, on that fateful day in 2015. And all over the course of those two meetings, of listening to Chris Larson at Ripple and to Brian at Coinbase, and hearing their story, their passion, but the reimagining of the rails, the reimagining of the infrastructure captured my attention. And at that point, I never looked back. You know, I actually bought some Bitcoin that day just to have a Coinbase account and know what it meant.
Right.
Unfortunately, I sold it quite a long time ago. So that was never really an impact for me. But ultimately, it forced me to go back to UBS and immediately say, wait a minute, there's something else going on here. And that's how I got started. That's why that led me to R3. R3 led me to DrumG. DrumG led me to SDX. So that's my origin story. And then, by the end, by 2016, I was almost to some extent part of the furniture in this blockchain space, and have slowly been accumulating dust for the last 5 years.
That's well, you're certainly an OG. I will agree with you there. I don't know about you collecting any dust because you're moving around so much around the world virtually that I think it's hard to actually keep up. I think a lot of people would admire the amount of energy you've expended in the last year, making sure that SDX and Six Group is firmly in the corner of leader, pioneer, and building next generation digital infrastructure. So let's talk about Six Group and SDX and the motivation there, because not everyone is familiar with how vast and varied the businesses are at Six Group. So just for those who are not as familiar with the nature of Six Group, can you unpack the various businesses and then how SDX fits in?
Yeah, absolutely. Look, I think let's start with a slightly a statement that would resonate with a lot of people, which is, remember in 2018, I'm going to channel what a lot of people were probably thinking in the summer of 2018 when they came out with the Six Digital Exchange announcement. And first thing people thought was, who's Six? A lot of people around the world don't necessarily know who Six is and what it does. I think they do now, but Six has come together from multiple organizations in Switzerland that were all different. There was a stock exchange, there was a financial information business, there was the CSD, and they came together under Six. I think it was 12 years ago, if my history serves me correct.
Right.
And that's basically running the entire market infrastructure in Switzerland, including the payment rails that we operate on behalf of the Swiss National Bank, which ends up coming back into our story. So it's actually quite a meaningful company, but it was very domestically Swiss focused. You would tend to have thought of it as the Swiss Stock Exchange. Everybody knows SWX or SSX, depending on which way you look at it. But we all know that there's the SMI index and all that stuff. You look at your Bloomberg screen in the morning and you've got the SMI index on there. When you do WEF, for all you Bloomberg users out there. Now, the big change that's happened recently, which is worth mentioning, is just as we go through stories, we've acquired the BME, so we now own the Spanish infrastructure. So we're not just a domestic Swiss player; we're a top 2-3 European FMI based, depending on which way you look at what metric you use. So we're a real kind of up there in the top 10 of FMIs globally, which is pretty significant. We're in good company. Now, the big question is, why would Six do this? Because you might be forgiven for thinking, well, maybe an LSE would do this, or a NASDAQ, or a CME, or an ICE, or one of these others. And to some extent, let's give ICE credit. They've done backed, and they're really getting into space. Let's give CME credit. They've gotten into the derivatives space. But no one has come out with a bold bet like this, which is, we're going to take a multi-year, expensive bet that digital assets and blockchain infrastructure is going to be a meaningful part of the future. And perhaps more importantly, we're willing to disrupt ourselves. And that's the part that frankly, even when I took the job, I had to get in and really find out if that was true. Are you really taking it that seriously? And the answer is that we are. I've had the good fortune now of spending a lot of time with our executive board and with our board of directors. and our board of directors is our clients, right? We're owned by the banks. We're privately owned by the banks, so we're owned by our clients. And there is no question that Six Group wants to take a long-term global view in setting up this new infrastructure. And if we do it right, and we're talking about 7-10 years from now, maybe more, then one day it would be logical that the Swiss Stock Exchange, the CSD, the Spanish Stock Exchange, the CSD, that they end up becoming part of this new infrastructure, not the old infrastructure.
Right.
And that is a really meaningful thing that I'm not sure everybody truly understands. And what a fascinating statement! What a fascinating position to take. And that ultimately, that statement right there is the reason I'm here, because if you have a chance with a platform and a global view like this to change the industry in the way that this would imply, and you happen to be around the right time, I'm 45. I've had, the right run, the right experience. I think I've developed some chops as a leader, and I've developed a position in this marketplace. If you have all these pieces of the puzzle and you have a chance to make a difference, then you get on that plane with your family and you move to Zurich. That's what you do. So that's the underlying context, Sandra, on Six making this extraordinary bet. What we need to do is show that in action now.
Yeah, I will definitely back you up when I say, when you say that the significance of a market infrastructure firm that does what it does today and is basically part of the, fabric of a country and plus, to then go and make this kind of move, it doesn't happen in market infrastructure. And I came from market infrastructure as well. And frankly, it takes a huge culture shift, mindset shift, as well as the funding allocation to do that. And so this is truly extraordinary. And I think people should not underestimate the amount of effort and collaboration and just single-mindedness to do this that needs to happen, especially for market infrastructure, even more than the banks, I would actually argue. Yeah. Market infrastructure is, let's face it, it's the plumbing. Nobody cares about it until it breaks, or if it breaks, then everyone complains, right? But you never get thanked for running every day properly. So I appreciate that. And I want to underscore what you've said, because it is a tremendous shift and focus. So let's talk about some of the silos and some of the problems that exist today in not only the stock exchange world, but just generally some of the frictions that we're seeing. And what is SDX going to focus on as you launch in 2021? Where are you going to start? I think there's also a bit of a misnomer that somehow you're going to get into cryptocurrencies and become like a Coinbase. Let's just dispel that right now. What are you guys going to be focusing on?
Yeah, it's if you start with the premise, which Six did, that we're going to build an exchange and a CSD, and we're going to build it completely separately from the current model, right? Parallel, ground up, blank sheet of paper, and you're going to use blockchain where it makes sense, which in our case is in the CSD. It's in the Central Securities Depository. That's where we're using R3's quarter platform. That's where we will make the digital assets. That's where they will become a digital asset. And the exchange, by the way, just to be clear, is built on NASDAQ. It's not using some fancy new mechanism, because it does not need it. Market structure on the trading side is well understood, but it does connect with the CSD. It allows us to do integrated trading and settlement, and that's sort of the core idea. An exchange and a CSD regulated by FINMA. Right. And let's talk about that very briefly. What about the FINMA angle? Like, we really, you mentioned the FMI part, which is right, and everybody should really understand how significant this bet is. But then you need a regulator who's going to come with you on the journey. And
Right.
they've been amazing. You know, Switzerland is an extremely progressive country in this particular space. From a politics perspective, from a societal perspective, from an industry perspective, innovation is very much something that's talked about a lot in Switzerland. You know, Crypto Valley, we all know that that's been a big part of it. A lot of the big associations like Ethereum Foundation, all that stuff are all based in Switzerland. So you've got kind of all the ingredients, but you also need a regulator and a central bank who are willing to back you up. And we are wildly fortunate to have both of those. And FINMA in particular, going on that journey to be the first sort of, I mean, look, we got to be a bit careful, and I prefer to be intellectually honest. You got to be a bit careful about all this first to do this, first to do that.
Right.
But let me be sort of clear about what we are going to do. We're going to be a fully regulated in an important global financial market with the same level of exchange and CSD licenses we actually have with the current exchange and CSD. That's really important. Not a watered down version, not a limited version. This is not an OTF. This is a full central securities depository and a full exchange. We will be pari passu in terms of the license with the fully functioning stock exchange and CSD. So to get to that point, to get FINMA comfortable with that for digital assets, and to do it in a way that stays true to the trust and security and operational readiness that you rightly said, Sandra, that no one talks about it until you go down. You usually get all the outages that we've seen this year from some of the other players. That's when you get the news items, and we can't be doing that. We can't be doing anything but the right level of uptime. That's an expensive proposition, and let's hit it head on. You know that this has taken longer and has been more expensive than we thought. That's because it's harder and than we thought, and it always is. It usually is. But now we're getting to that point with FINMA behind us that we get to launch with this platform. Now let's go back to your question. That's what we launch with: a CSD, an exchange, the ability to do equity and debt on our platform. Although our license will allow us to do not more. How do you start? You know, it's kind of a funny market to be in, because most of the exchanges that have been set up in the last 20, 30 years were being set up in a functioning marketplace. Maybe it was CLS, maybe it was Turquoise, all these things. You had liquidity and you were bringing a faster, better, cheaper proposition to the table.
Yep.
There is no liquidity. There are no, material amount of digital assets outside of crypto to speak of. So we're in this kind of odd world where we need to ignite the market. We need to create the liquidity for our platform to be relevant. And now we're getting into what I like to cite all the time as multi-sided platform building. This is the theory of who do you incentivize to come first, so that someone else comes and then someone else comes, and then you get this virtuous circle. And that's the problem that we're dealing with here right now. And it is, aside making sure we deliver this platform, and we are definitely blazing a trail with R3 on certain capabilities which even R3 didn't know it needed. And that's very exciting that we're kind of really cutting edge. This CSD is going to be, I think, something that we can be very proud of. But if you build it, they won't come. So the answer to your question is, we're going to do some issuances. We're going to do some bonds, very materially sized, 100 million plus in the Swiss bond index, big name issuers. We're going to do some equity private placements with some meaningful banks. We're working on loan tokenization with big European institutions. The reason we're doing that is because they want those loans to be off their balance sheet. Now we're talking about solutions. Now we're talking about solving a problem.
Yes.
And that's where we need to get to, right? And that's super exciting. The last piece of this puzzle is we're going to be talking, and I'm going to give you just a very quick preview about something. I use the term ignite, and that's really captured our attention, because this is like, you know, we need the match that lights the flame, or that lights the fire. And we're going to be working. We need pre-commitment of liquidity from a big bunch of institutions. Otherwise, this isn't going to work. So we're actively talking to the market about what that would look like. And if we do our jobs right in 2021, we come out towards the Q3, Q4 with not just a platform, but a functioning marketplace, real assets on there, not high frequency trading, not some huge volume of activity in year one, but something where any market player will look at it and go, oh, that's the pieces of the puzzle that we need. And now we can feel more confident about engaging. And that's how we plan to come to market, Sandra.
Thank you for that. That is excellent. And I do want to go back to a topic that you have clearly underscored, which is liquidity. Anyone who's been around product development, financial services product development, market infrastructure knows that just because you create something doesn't mean that a market just automatically poof appears before your eyes. It takes a lot of effort to get that supply and demand side. And so clearly you're working towards that. I think the other thing, you know, I want to highlight here is, I think in the crypto space in particular, in the blockchain space, there's this real misconception that if you were to fractionalize something or to tokenize something, that all of a sudden there's also liquidity in the market. And real estate is a classic one I hear all the time. And don't get me wrong, I love the concept of multi-ownership or multi-party ownership of real estate assets, but that does not beget liquidity. Tim, could you just touch upon how you see the importance of how do you get liquidity? What are the key ingredients to getting liquidity in any market, let alone digital assets?
Yeah, you know, it's funny. I'm sure a lot of us who have been in the traditional financial markets for many years, when we saw the crypto markets, and to be clear, and we will touch upon this again, because I do want to talk a little bit about us moving more into that space, because we are. A lot of the younger, less financial market experienced players who are in that market made classic errors that, if you've been in financial markets and you've seen the liquidity rising and what lack of liquidity does, that not to make. And one of the most frequent, and I think we all have a bit of an internal chuckle, and we're not being putting ourselves above people. It's just, we've been through this, we've lived through this at scale in multiple markets around the world. You don't just magic up liquidity. Like, the pieces of the puzzle required to really get institutional liquidity are significant. And what do you need? You need market makers who are willing to deploy capital. You need buyers and sellers, i.e. you need issuers of assets, you need asset flow, you need buyers on the buy side. Sorry if there's noise in the background. Some trucks decided to come in and do something in my garage. And then you need infrastructure. You need financial market infrastructure. You need the KYC, elements of it, the ALM elements of it. You need the security. You need the regulation. You might need some central bank activity. Like, you need a lot. Like, this isn't. You can set up a Coinbase and in an unregulated market. And hey, I've got nothing against Coinbase. I think they've done an amazing job. But at the end of the day, you can't do that in a regulated world that we live in. I often made the joke that, if we tried to do what that we've done in financial services, what's been done in like Facebook and other areas, that you try to do that, you'll go to jail in our world. And we've seen some of that, by the way, in the last few months, no less. So we've had to really wait for the last few years to see these pieces of the puzzle come together. But now we have all the things. We've discussed them all on this call. So what's the last piece of the puzzle? Committed capital.
Yeah.
And we are now at that point where we're talking with the banks, we're talking with the buy side, we're talking with the issuers to get the end-to-end. Someone who's wishing to issue, and let's just take bond as an example, has got to issue the bond, You've got to be a
Yep.
syndicate member for the bond primary markets. You've got to have a secondary market liquidity support. You then put it through our infrastructure, which has to be regulated and has to be built and has to be all the above. Then you need custody banks, and then you need the buy side. And that's a lot of players that you need to align to get one bond issue to go through the market in its entirety. And that's never been done. That no one's ever been able to do that with a digital asset quite like that, not at institutional level. So that's what we're aiming for, to pull that off next year. But even then, one bond doesn't make a market. So we need to create that level of confidence that if an issuer comes, there are multiple market makers ready to support that. And that's why I mentioned that Ignite concept that they were coming towards. But the part that I think's been missing, and we think's been missing, and I alluded to it when I said solutions, is you need to tap into a secular demand for something. Bond issues have been going on for a long time, and there's a functioning marketplace, so that can't be the answer. It's not going to be equity, because we're not going to be tokenizing Novartis shares. I noticed someone asked a question about tokenization of assets. Yes, we will absolutely be tokenizing assets. But where are the new pockets of demand? Is it real estate? Is it non-bankables? Is it loans? Is it other ways that we connect? We've got to be really creative. And I don't think the market's quite got its head around that yet. So we know that we're going to have to force ourselves to be the driver of those solutions with the marketplace. So that's, I think, how we get to liquidity, Sandra.
Fantastic. I really appreciate the completeness of that answer. And frankly, I think there is a long road to travel as well. And let's go back to the bond market for a second, because I agree with you wholly that it functions. There are multiple players that have to come together to make a bond issuance work and therefore tradable. But there's also a certain amount of opacity to that process. There's also a certain amount of kind of old school behaviors that still are processes that are still in play. And I think the fact that you and SDX will be automating that, digitizing that, and also making it, frankly, more transparent in many facets is not insignificant. And if all bonds start going in that direction, and we're seeing multi-layers of different types of bonds, whether it's munis or green or whatever have you, it's an enormous market. So I appreciate that you're actually solving for, I think, a not as well articulated or known problem, but I still think it's a problem.
It is a problem. And, the other part of this is, and we've had a lot of discussions recently with big issuers about this, is in a funny way, we've come full circle, because I remember when getting in the tail end of 2015, when I got into this space, people were talking about putting the bonds on the blockchain.
Yeah.
And those of us who know the space were like, you're not going to be able to do that. You're not going to be able to do that overnight. Like, that's going to take a long time for us to get there. Now, the point is, we still need to be intellectually honest about the journey. We didn't know, if we look at the internet journey, half of the stuff, most of the stuff that ended up being revolutionary for us back in the mid-90s, when it started to creep into our collective consciousness, and we first got our Netscape browsers and our email addresses. I think it's a bit the same here. Like, you can't really know where this is going to go, and that shouldn't be a reason not to full steam ahead. When you've got a global community, and again, this is an area where, Sandra, you and can legitimately, after several years in the space, we can tell a few war stories. We've been in all those conversations in all those boardrooms around the world about your level of commitment, and do you understand. Now we've gotten to a point where I don't think it's a case of is it going to be meaningful. There's too much time, money, and effort, and smart people that have been applied to this. The answer is, this is going to be revolutionary. The real question is how and when, on what time frame. And we need to get on the journey. So when we talk to an issuer and they say, what is the value to me of doing this? Where's the efficiency day one? You just have to acknowledge that the efficiency is not really that material day one. But that's not why we're doing it day one. The reason why doing it is to have everybody connected to a piece of legitimate digital market infrastructure that can form the basis. And we're not monopolists. I hope there are many other exchanges and FM, DMIs as we call them, that creep up. That's a good for a revolution in the space.
Sure.
But we need to get with the program that it's going to be 5, 7, 10 years before we really see that new model start to come together, where you've got consistent mutualized processing and the transparency and the data side of it, which we don't talk about enough, the importance of getting the data right, the standards, right, which we've been working with GBBC on, with the GSMI and other different like the stuff we're doing with the Interwork Alliance and all that stuff.
Sure.
It's going to take years to get it right, but can we kind of put a marker at 2020 and say, yeah, all the ingredients finally came together? Yeah, I think we can. The technology got mature enough, the commitment got significant enough, the market structure started to look like it was forming, the issuers started to come to the table, the assets started to come to the table. Now let's get into the next leg of the journey. If we do our jobs right, will we look back in 10 years time and say, yeah, now we're changing it? Yes, we should, but we won't be looking at that a year from now. We'll be high-fiving because we got a few big bond issues out and we showed it going end to end.
Sure.
So I think that journey is really important. Let's take the journey and be bold and try and get away from our dominant logic of the 20th century, which is what's holding us back, unfortunately. That it's the way it was always done. And you mentioned silos earlier. What are the silos? Well, the bond markets and the equity markets and the FX markets and they all operate on different rails. The cash markets and the derivatives markets in the bond world operate on different rails.
Yep.
There's an opportunity here to harmonize the rails so that all of these assets, for the most part, operate on some level of commonality. How can that not be good for society at the end of the day? Because why, and this is where I always come back to, and I've said this before, Sandra, what really gets me out of bed in the morning is if we're able to lower the cost structure overall for doing this, increase the access to capital formation and get to a local global liquidity story, we are going to be able to allow for a more economic benefit, more economic growth, more benefit for society is what this should result in, rather than benefit for SIX or any of the individual players. And that's ultimately what drives me, Sandra.
Well, I love how you've ended there, because I actually want to pick up on a couple different things. We'll talk about standards in a second, but let's talk about, I've heard you refer to this, and we'd have this conversation, I think a month or so ago, about the difference between democratized finance and DeFi, which is decentralized finance. And I know you have some, very strong, and frankly, I agree with you, opinions about what those two things mean. Could you talk a little bit about that for the audience who may have not heard that from you before?
Yeah, no, I've gotten more and more confident in this story as I've talked about it more and more. And I actually sort of said it for the first time on a GBBC event a few months ago. And it's really sort of gained momentum. And let me preface this by saying, I'm a collaboratist, collaborationist, I suppose. I'm all about collaboration. I'm all about working together as an ecosystem. I'm all about all the players thinking infinitely rather than thinking sort of in terms of the classic 20th century defensive model where I'm going to be monopoly and I'm going to make everybody else fail. So I don't have any kind of issues with the crypto markets and the digital asset markets. I don't have any issues with any one platform versus another, open, public versus private blockchains and all that. It's all there for the taking. It's all tools to be used. They're all making amazing developments. And I definitely don't have anything against DeFi. I think it's really interesting, some of the new things that we're seeing there, and learning from the first kind of wave to maybe do this a little differently, and maybe include the institutions earlier because that's how you get scale. This is not a retail play. You know, the institutional play is how you change the world. And so it's not against, I have nothing against any of that. But I tell you what I do have an issue with is the term DeFi, because it's decentralized finance feels very much focused on the wrong thing. Decentralization is not a thing that's new. Like we've been doing, and I would argue that the capital markets is already decentralized. You've got multiple markets, all centralized in their own right, but they're not centralized globally. Like it's been like this for a long time. So, you know, and I don't want to be flippant, but sorry, kids, you didn't invent decentralization. You know what I mean? Like it's been there all along.
Right.
Now, you did invent some amazing things. Blockchain is incredible, and some of the sort of what I would call the more libertarian concepts that underline this, I'm with on equality and better access for everybody. That sounds not like decentralization or centralization or where you land on that dynamic. It's more along the lines of open finance, and it's more along the lines of democratization. And I think, to me, you know, I always joke, well, the real DeFi, please stand up. The real DeFi is democratized finance. If we can all agree that the objective function is faster, better, cheaper for individuals, corporations, and governments, then let's call it that, and let's all join forces and let's start to build this future together. And that's something that I think has immense promise. But unfortunately, if you kind of get waylaid by decentralization for decentralization's sake,
Right.
I think it's not that it's not useful. It's not the point. It's not the end game. It's a means to an end. So
Yep.
let's all get behind the DeFi thing, you know.
No, look, I share a lot of the same views that you have, which is, you know, it's the same thing with tech for just tech's sake. If it's not really helping humanity and society or solving a problem, you know, what is the point? I guess it's a nice experiment. What is the actual global impact or community impact? Let's talk about what we need to scale globally. What is next? You got a CBDC question here, but let's hold off on that for a second. Let's talk about standards, the regulatory environment. We obviously know, and you work with FINMA very closely. They're one of the more open, progressive, and frankly, clear regulators on where they stand on a lot of these issues. That's not the case around the world. In your mind, what do we need in 2021 and beyond to really get to a global scaling that we need, and not have, let's face it, jurisdictional arbitrage, which is usually the case for financial services? Do we end up there, unfortunately, or can we do better?
Yeah, I think, you know, we've alluded to the pieces of the puzzle, but you're right. What we didn't talk about is that cross-border aspect, and therein lies possibly one of the most important silos that exists. Yeah. And this is where I will support the sort of the crypto movement in its borderless capacity. It did show the way to how we might be able to look at a global marketplace rather than be somewhat limited. And look, we can all agree with the construct that the 20th century, you know, the regulatory construct and jurisdictional contract is there to save, it's there to help people, it's there to make sure people don't get fleeced, is always the term I use. And it's good, you know, that government should look after their citizens and their investors, and investor protection should be the core tenet that we should all be getting behind. But that 20th century construct has massive limitations on allowing, you know, capital to move, and if we're able to do if we want to do what we want to do, if we really want to deliver on this promise of global liquidity and smarter, better, cheaper, and democratized finance, we need to get that right. So for one part, I think we need some companies to think globally. There are many, but I'm going to say that we are one. And, you know, I'm not going to scoop myself, but keep your eyes peeled in the next week or so. because we might be talking about some global activity that we're getting involved in. And 1 week from now or so, that will sort of be a bit clearer. But we need to open up exchanges around the world. That's the plan. We want to think about Asia, want to think about North America, South America, other locations in Europe. We're in Switzerland, but we need to be in the EU. You would imagine we might want to be in Spain. The UK has to be still regarded as an important location. What about the Middle East?
Right.
All of this is in our plans, and we are architecting and thinking about that global liquidity network, and we'll probably partner with fantastic partners around the world to do it. So we need that, and we're going to need to be able to, what's the holy grail? That somewhere in Japan, someone wants to buy an asset. It shouldn't matter where that asset is listed. It should be available. Do we really need 24/7 or 24/5? Maybe we do, maybe we don't, but we probably need something that isn't a very limited sort of time of the day that you can trade specific things. That feels very antiquated now in the modern age. And so how we get to that market structure is an interesting question and will be an interesting journey. But that's an important thing. But then we need the regulators and the central banks to collaborate. And good news is we're starting to see that. But I would say we need to accelerate that even more. Like, common standards at the regulatory and the central banking level. And then, let's talk about standards, which is something that's very close to your heart and my heart, Sandra, is they're among the driest subject there is. Let's not pretend we all run around loving reading about, standards. Right. But we all know intuitively that without them, we're screwed and that we're going to have fragmentation, right?
Absolutely. And look, some group of people need to bring that together. And frankly, one of the drivers from GBBC side is it wasn't happening. That aggregation wasn't happening. That analysis wasn't happening. Everyone was in their own little silos, putting out different standards, different taxonomy. And frankly, the Global Standards Mapping Initiative, with partners like yourselves and WEF and MIT and Accenture, et cetera, list goes on, GDF, we managed to create a group of people who actually care and work towards not only picking up all the puzzle pieces around the world, but then analyzing where are the gaps, where's the overlap. And by the way, 2021, we're going to continue working on this. And your colleague, Ben, is, co-chairing a number of our initiatives on the side, but taxonomy, we're back to still definitions. It is unbelievable to me, and it shouldn't be unbelievable, but we still have disagreements around taxonomy. So there's a lot of work for us to do. And I agree with you. The cross-border nature of getting real world traditional institutions to adapt to what crypto world already knows intuitively is a big challenge, not just operations and business, but regulatory, legal, et cetera, et cetera. So,
well, and the other point to make on that is, no good standards were ever defined by a bunch of people sitting around a table talking about it. They tend to come out because someone's doing something and it's being used in the marketplace or in that particular area. So I think what we need to see, and we want to be a part of this movement, but this is a non-denominational, non-adversarial space. Standards is where we all need to link arms, and we need to start, getting assets out into the market and using standards and saying, here's a standard, it might not be perfect, but let's start with this. And then I think we'll see it forming. And I suspect 2021, I hope that 2021 gives us a chance to start seeing real activity where you can say, okay, that's using a standard now, rather than it being a sort of theoretical idea.
Yeah, no, I agree with you. And I'm going to then turn to another key piece, which has become very, very topical, even though the concept's been around for a while, which is central bank digital currency. And you've got a question here about whether in Switzerland it's an aspiration and how SDX may or may not be involved in that.
Yeah, look, I think you'll get the scoop on this call. There are 3 big press releases coming from us in the next week. Okay. One of them will be around central bank digital currency, and it will be, it's widely known that we're working with the Swiss National Bank. It's also widely known and public that we're working with the Banque de France, with a great group of partners. And and we are serious about the importance of CBDC as the payment leg can't be underestimated. And again, nothing against stable coins and other forms. We need all these pieces of the puzzle, but if we're going to really unlock institutional wholesale capital markets, we're going to need central bank issued digital currency. And the good news is, and this is the same as with FINMA in Switzerland, Swiss National Bank is among the most progressive of all the global central banks. I would put Singapore in that category. Canada was one of the early movers. There's a bunch of others as well. Sweden.
Is it me, or did we lose Tim?
Yes, I think Tim is having some technical difficulties.
Okay, we will wait for Tim to come back and have him pick up on
putting itself on the map because it's going to.
Yeah, Tim, we lost you partway there when you were talking about Bank of Canada, and then there's some other progressive countries, and then we lost you.
Yeah, sorry about that. I've really got the truth. I've got the sun coming through the window. I've got some truck outside making noise, and now my internet's unstable. Roll on being in a room one day back again, and not being so virtual. So yeah, there's a bunch of different players around the world that have done some great work, but Switzerland certainly is now, and this announcement that we'll make is going to, I think, really put another stake in the ground. We've done this work. It's really meaningful work. We've done some real kind of production grade stuff with SNB, and this will all be outlined in the next few days. But I'm way more excited about where we're going than what we've done. I'm way more excited that the Swiss National Bank is at least contemplating the idea of a path to changing policy at the board level at the SNB. Now, this is a huge statement. Now, we can't speak on behalf of the SNB, and I'm not saying when it's going to happen, but I'm saying there's at least a sort of a spirit and an intent to go in that direction, and we get to be the partner that provides some of the infrastructure for that, and that's a privileged position. I think we're honored to be working with them, and I think we take it very seriously. But that's only step one. We need that cross-border step, and the work that we're doing with the Banque de France, I think, could end up being a good example of that. The work that, and I would anticipate in 2021 that you will see some other connectivity cross-border with Switzerland and other locations, and that will all accrue. Now, again, it's the journey. Could we look back in 3 years and see some central bank digital currency being issued? I'd like to think so. 5 years, I certainly hope so. 10 years, I hope it's starting to become somewhat prolific. But we got to make these steps, and now we've got the rails to do this payment leg. But there's other great work. Finality is doing some great work, and I suspect we'll see different versions and different. There's a digital dollar that's happening as well, and all of this stuff, I think, accrues. But I think it leads to the, since we're talking about the 3 press releases we have, one is on another location, one is on central bank digital currency, and one is in cryptocurrency. So if I may, let's talk about that a little bit. So crypto, and you've been in this seat, Sandra. The CME activity brought the sort of institutional and the crypto together. Yeah. And that's a journey that continues. And I think, I don't know about you, but I've certainly seen in 2020 a significant acquiescence of the institutional market to the inevitability of crypto being an asset class that needs to be accepted.
Yes.
Therefore, we as an FMI need to acquiesce in the same way. So you're going to see in the next few days, but also over the next year or two, us moving more into being an institutional venue that allows regulated institutions to participate in this market in a way that's trusted and secure. I don't have to have an opinion on whether Bitcoin's going up or down. I just have to know that there are a lot of institutions that want to participate in that marketplace, and therefore I need to provide the solution to that. So we're going to be doing that now, and you'll see in the next few days an announcement about activity in Switzerland that really shows our commitment to that. and that's another exciting piece of the puzzle.
Well, I have to tell you, you've given us some bonus previews here that we weren't expecting. So there'll be a lot of, I guess, news coming out in the next few weeks. Tim and I will also be sharing a virtual stage at the Singapore FinTech Festival blockchain vertical. So we'll talk in a few weeks' time, or maybe it's actually only about a week and a half away. But I want to end with a final question and your final thoughts, Tim. And this is for the young entrepreneurs that are out there, the entrepreneurs who are out there of all ages. It's tough times. We've all had to pivot. We've all had to adjust. Blockchain world has probably been a little bit easier because we were digital anyway. And so we could still continue a lot of our work. But as an entrepreneur, as a seasoned, financial services banker, what advice do you have about weathering crises and storms? And, just generally, what can you say to someone who's out there who's, thinking about creating a business right now or launching one in the middle of a pandemic?
Yeah, it's a mindset, really. At the end of the day, it's a mindset. I'll go back to the comment I made earlier, the entrepreneurialism or entrepreneurship, depending on how you look at it, it's got a romanticized view, and some of it's true. Some of the thrill is true. Some of the thrill of doing something on your own is absolutely true. But some of it is harder than that. And I think there's a gritty attitude that's needed at any part of the journey from an entrepreneurial perspective. And I've started something from scratch and built it, and ultimately DrumG failed. We didn't get where we want to go after 3 years. Do I regret any second of that? No, none of us do that were involved in it, because we did something meaningful. We learned a lot, especially about culture. I think that the key is, and I've heard this was advice that was given to me, and I can't claim it as my own, but okay. The number one starting point is people think it's having the idea. I actually don't even think it's that. It's like having the right people to work with. Any venture requires the right partners. I don't think anyone can do anything on their own. You need to do something with a team, whether it be 2, 3, 4 people. We started DrumG with 4 of us, and we were and continue to be an extraordinary group of people who saw eye to eye and knew how to get through the tough times. And boy, did we have some howling moments where we were close to going down a couple of times. And the whole point is, if you've got the right people around you, then you can do anything. And that's a life lesson in a general sense. But you have to reach that point of trust and true alignment with people on from a values perspective. And I think too often the corporate world it's hard in the corporate world to really get into a values discussion, because large corporations, it's just hard to do it. In a small group of 4 people, all you have is the values that drive you. All you have is what it means. Why are you doing this? What does it mean to do this? How should we do this? What are our ground rules? It's not a shareholder agreement. It's a discussion. And one of the things that we learned, and we really did well at DrumG, is we started that discussion day one. We really aligned on what values mean. And that would be my advice to anybody, is like, get your values set with the people that matter, and you can conquer the world.
That is right. True words, if ever. Tim, I'll be seeing you again in a couple of weeks, but thank you so much for spending valuable time with us and the audience. And for the person who asked the question around whether there's a recording of this, yes, there's a recording that will be available for downloads, and we'll circulate that after the session. Back over to you, Sophia. Thank you very much, Tim. That's CEO of SDX, as well as to our partner, Global Digital Finance, GDF, for the series. Thank you, Sophia. Thank you, Tim.
Thank you, guys.
Thanks so much. Sandra's pretty much summed it up. We'll make a recording available online for those who weren't able to join us today, and stay tuned for future GBBC and GDF webinars, which we'll also distribute. Thanks so much. Thank you, Tim. Thank you, Sandra.
Bye.
Bye.